Now let us dive deeper into common mistakes investors regularly make today. Many beginners enter stock market without understanding basic principles of investing properly. They often rely. Have you ever lost money in stock market without understanding why? Yet most beginners jump into trading, hoping quick profits but face unexpected losses. They follow rumors instead of learning real market fundamentals and strategies properly. Every mistake in investing can silently destroy your long-term wealth growth. What if you could avoid those costly mistakes before losing everything today? Today, we will uncover hidden stock market mistakes most investors make daily. These mistakes are simple yet devastating for long-term financial success journey. You may already be making some of these without realizing it completely. Understanding them can completely change your investing future forever if applied correctly today. Most people think stock market is easy path to wealth building long-term, but reality is very different and often emotionally challenging for beginners every day. In this journey, you will learn how to protect your capital effectively and avoid traps that destroy even experienced investors over time, slowly and silently. Let us start by understanding the biggest mindset mistake first in trading psychology. That mistake alone has ruined more portfolios than market crashes combined worldwide. Investors often enter market without proper education or preparation whatsoever today at all. They rely on social media tips instead of real analysis methods or data. This behavior creates emotional trading decisions, leading to heavy losses over time. Fear and greed are two strongest enemies of every investor always present. Most beginners buy high and sell low during panic situations in markets. This cycle repeats until they completely lose confidence in investing altogether. Process discipline separates successful investors from emotional decision makers consistently over time. Clearly, without discipline, even best strategies fail in volatile markets unexpectedly, frequently, always. Many investors ignore risk management and focus only on profits, quick gains. This mistake leads to catastrophic losses during market downturns, unexpectedly fast events. Successful investing requires patience and consistent long-term thinking. Strategically applied daily short-term noise often misleads investors into wrong decisions, frequently emotionally driven actions. Understanding market cycles is crucial for long-term success. Building wealth properly. Most losses happen due to impatience and poor planning. Initially, during early stages, investors must learn to control emotions before entering trades seriously every single time. Even professional traders make mistakes, but they manage risk effectively consistently. Always, risk management is more important than chasing high returns quickly. In any market, you should always research before investing your hard-earned money carefully. First, lack of knowledge is biggest reason behind financial failures globally among beginners everywhere. Learn from mistakes instead of repeating them again and again carefully. Always, emotional control is key to surviving volatile stock markets successfully over long term. Many investors fail because they follow crowd blindly without questioning anything at all. Successful investing requires independent thinking and strong discipline, always over market cycles. Do not let emotions control your financial decisions ever completely under pressure. Planning ahead reduces risk and increases investment confidence significantly over time. Always, understanding fees and charges is often ignored by beginners completely in markets. High trading frequency usually increases transaction costs significantly over time, unnecessarily. Always, patience allows compounding to work effectively in your favor over long term. Without patience, investors often exit positions too early, incorrectly missing potential gains. Stock market rewards discipline, not random decision making over time consistently. Always, education is most powerful tool for successful investing. Long-term growth journey. Start small and gradually build your investment portfolio carefully over time. Wisely, do not compare your journey with other investors constantly. On social media, every investor has different goals and risk tolerance levels uniquely based on experience. Consistency beats luck when building long-term wealth, always over time. Clearly learn patience because markets reward disciplined investors over time, consistently, always fully. Never invest money you cannot afford to lose emotionally in volatile markets. Stock market success requires knowledge, discipline, and patience together over time consistently. Your mindset determines whether you win or lose in investing over long term. Stay with me as we uncover deeper hidden investing mistakes together step by step. Now let us dive deeper into common mistakes investors regularly make today. Many beginners enter stock market without understanding basic principles of investing properly. They often rely on tips from friends instead of solid research analysis. A real example involves traders buying hype stocks during social media trends. This behavior usually leads to losses when excitement disappears from market quickly. One investor once lost savings after following following viral stock recommendation blindly online. Another mistake is not setting stop loss before entering any trade position. Without stop loss, investors risk losing more money than they can afford. Emotional trading often causes panic selling during temporary market fluctuations, always happening. Smart investors stay calm and follow planned strategies even in uncertainty period. Overconfidence is another dangerous mistake that destroys many portfolios very quickly. Indeed, investors sometimes think they can predict every market move accurately, always consistently. Markets are unpredictable and require humility rather than ego-driven decisions always. And a diversification mistake happens when investors put all money in one stock only. This lack of diversification increases risk significantly during market downturn phases strongly. Experienced investors always spread investments across multiple sectors for safety and stability. Ignoring company fundamentals is another critical mistake beginners make repeatedly without research. Investors must analyze earnings, debt, and growth before purchasing any stock carefully. Many losses occur because people chase hot stocks without evaluation, proper analysis. Timing the market perfectly is nearly impossible for most investors consistently over time. Instead, investors should focus on timing market for growth long term. Short-term volatility often scares beginners into making wrong decisions, emotionally driven. Successful investors treat volatility as opportunity rather than threat, always patiently, strategically. Another mistake is following hype without understanding underlying business model properly first. Fear of missing out causes irrational buying during market rallies frequently seen. This FOMO behavior leads to buying at highest possible prices unnecessarily often. Professional investors avoid emotional decisions by sticking to clear strategies strictly always. Tracking investments regularly helps identify mistakes early before major losses occur quickly. Ignoring market news completely can also lead to poor decisions unexpectedly sometimes. Balanced information helps investors make more rational choices consistently over time wisely. Many beginners ignore fees, which slowly reduce overall investment returns significantly always. Understanding cost structure is essential for long-term profitability, success growth always. Overtrading is another mistake that reduces profits through excessive transactions frequently done. Patience is key because compounding requires time to generate wealth successfully always. Investors often underestimate power of holding quality stocks long-term, consistently, strategically. Emotional discipline ensures investors survive both bull and bear markets successfully always. Learning from past mistakes improves future investment decision-making skills significantly over time. Successful investors keep journals to track performance and improve strategy consistently always. Avoiding unnecessary complexity helps investors stay focused on goals clearly and effectively. Simple strategies often outperform complicated trading systems over time consistently in markets. Risk awareness separates successful investors from inexperienced traders quickly, every time, always. Many investors ignore macroeconomic factors affecting stock market performance globally and locally. Understanding economic trends improves investment timing and portfolio selection greatly over time. Herd mentality leads investors to follow crowd without thinking independently at all. Independent thinking protects investors from emotional market manipulation traps effectively in markets. Successful investing requires continuous learning and adapting to changes in financial markets. Staying updated with market knowledge reduces costly investment errors significantly over time. Discipline ensures investors stick to plans during market turbulence without panic reactions. Planning exit strategies is as important as entry decisions always in investing. Many losses occur due to lack of proper exit planning strategies applied. Understanding when to sell is crucial for protecting capital effectively in markets. Successful investors focus on consistency rather than quick profits always over time. Building wealth requires patience, discipline. Now here comes the deeper truth most investors completely fail to understand. Stock market mistakes are not just technical, they are deeply psychological behaviors. This hidden psychology is what truly separates winners from consistent losers always. Most people think learning charts is enough, but that is wrong assumption. See, even perfect strategies fail when emotions take complete control of investors' mind. Here's the twist most beginners never realize until it becomes too late. Stock market does not punish lack of knowledge, knowledge as much as emotions. Emotions amplify mistakes, turning small errors into massive financial disasters quickly always. That is why two investors using same strategy get completely different results. One succeeds while other fails due to emotional discipline difference alone present. The real edge in investing is not information but emotional mastery skill. Professional investors train themselves to stay calm during extreme market volatility periods. Beginners panic easily because they lack experience handling market uncertainty situations properly. Another hidden truth is market rewards patience more than aggressive trading behavior. Aggressive traders often lose money because they chase every small movement constantly. Market noise tricks investors into believing every move is important signal always, but successful investors ignore noise and focus on long-term trends only. This perspective shift completely changes how you see stock market behavior forever. Instead of predicting market movements, focus on managing risk effectively, always strategically. Risk management is invisible foundation behind every successful investor journey consistently applied. Without it, even smartest investors eventually face unavoidable financial losses over time. The twist is market does not change. People change themselves eventually always. Those who adapt emotionally survive while others repeat same mistakes endlessly, continuously. You are not competing against market, but against your own emotions daily. Understanding this alone can dramatically improve your investment success rate significantly over time. Most losses are not market failures. They are self-control failures. Ultimately, every trade reflects your mindset more than actual market conditions present always. That is the deeper insight experienced investors understand very clearly. Always indeed, market mastery begins with mastering your internal emotional responses consistently over time. No strategy works without emotional discipline and patience combined together properly. Always, this is why education alone cannot guarantee investing success in markets completely. Behavioral control matters more than technical analysis in real trading situations always. Even experts constantly work on improving their psychological discipline every day consistently. Markets reward consistency, not occasional brilliance or lucky predictions over time. Always, understanding yourself is more powerful than understanding stock charts alone. Completely always. This realization completely transforms how you approach investing decisions forever, truly effectively. Emotional awareness gives investors long-term advantage in volatile markets consistently applied. That advantage compounds over time, like money in smart investments consistently always. Now you see investing is more psychology than pure mathematics. Always true. The biggest mistake is ignoring your own behavioral weaknesses completely always present. Once you fix behavior, investing results naturally improve over time significantly. Always, this is the hidden secret behind all consistent market winners. Always present. They do not predict market, they control themselves effectively. Always consistently over time. Mastering self-control is ultimate skill in stock market investing always required. Without it, no investor can achieve lasting financial success ever truly always. This truth separates professional investors from emotional beginners clearly always indeed. Recognizing emotional patterns is first step toward investing mastery journey successfully achieved. Once recognized, you can finally take control of your investments fully always. This awareness alone reduces mistakes dramatically in stock market trading over time. Most people never reach this stage because they ignore psychology completely always. But now you understand real cause behind repeated investing losses clearly always. This understanding changes everything about how you invest moving forward completely forever. You are no longer just an investor, but disciplined decision maker, always evolving. Stay with me for final part where strategy becomes action. Now let us conclude everything into clear, actionable investing discipline rules. Today, stock market success depends on discipline, consistency, and emotional control. Always together, you must build habits that protect your capital in every situation carefully. Start by avoiding emotional trading decisions during sudden market movements completely always. Always focus on long-term wealth building instead of quick profits mindset. Risk management should be your top priority before entering any trade position. Never invest money you cannot afford to lose under pressure situations emotionally. Diversification helps reduce risk and stabilize your investment portfolio effectively over time. Do not follow crowd blindly without doing your own research first always. Patience allows compounding to work in your favor over long term successfully. Avoid overtrading because excessive transactions reduce overall investment returns significantly always over time. Keep learning continuously to improve your investing skills and knowledge base consistently. Track your investments regularly to identify mistakes and correct them early quickly. Control emotions during volatility because panic leads to unnecessary losses always happening. Develop a clear investment plan and stick to it consistently, always strictly. Do not rely on rumors or unverified stock tips from others blindly. Understand market cycles to make better investment decisions over time wisely always. Avoid emotional buying during hype periods and stock market rallies completely always. Successful investors stay disciplined even during extreme market uncertainty situations, always consistently. Never let fear or greed control your financial investment decisions ever again. Focus on quality stocks instead of chasing quick market trends constantly always. Always analyze company fundamentals before making any investment decision carefully always first. Avoid comparing your investment journey with others on social media constantly unnecessarily. Consistency and strategy leads to long-term financial success, always eventually achieved. Learn from every mistake instead of repeating the same errors again and again. Maintain discipline, even when markets become highly unpredictable and volatile always present. Use stop-loss orders to protect your capital from major losses effectively. Never invest based on emotions because it leads to poor outcomes always. Stay patient and let investments grow over extended periods of time successfully. Educate yourself continuously to stay ahead in competitive stock markets consistently always. Avoid panic selling during temporary downturns in market conditions. Always remain calm. Focus on long-term goals instead of short-term fluctuations constantly always. Understand that losses are part of learning and investing journey always present. Do not chase every stock tip without proper analysis first, ever always. Build wealth slowly through discipline and consistent investing habits over time always. Stay away from emotional trading and impulsive financial decisions. Always completely forever. Plan your investments carefully before entering any financial position. Strategically always first. Avoid investing in unknown stocks without proper research and understanding completely always. Successful investing requires patience, discipline, and continuous learning approach always over time. Do not let market fluctuations disturb your long-term strategy ever again. Always review your portfolio performance to improve investment decisions regularly, consistently, always. Avoid emotional reactions during sudden market crashes or corrections completely always happening. Invest only in assets you fully understand and trust deeply always first. Never ignore risk management because it protects your financial future always effectively. Avoid emotional attachment to stocks when selling becomes necessary always at times. Stay focused on long-term wealth creation instead of speculation constantly always. Do not depend on luck because investing requires proper strategy always first. Learn to control emotions and think logically during market volatility situations always. Avoid rushing into trades without proper evaluation and analysis always first ever. Successful investors think long-term and act with discipline always consistently over time. Avoid emotional decisions that can destroy your entire investment portfolio completely always. Build strong investment habits that support long-term financial freedom eventually achieved. Never underestimate importance of patience in stock market investing journey always present. Your success depends on discipline, learning, and emotional control daily, consistently, always. Now take action and apply these lessons. Now we reach the final transformation that changes how you see investing forever. Everything you learned earlier must now turn into consistent real-life action. Knowledge without execution in stock market leads to repeated financial disappointment always. True investors are not defined by information, but by disciplined behavior always. The market will continue testing your emotions in every possible situation repeatedly. Your job is to stay calm and stick to your strategy always. Every mistake you avoid now protects your future financial freedom significantly over time. Think of investing as a journey, not a race against anyone else. Slow, consistent growth always beats fast emotional gains that collapse quickly later. If you stay disciplined, your portfolio will reflect your patience over time. Remember, every successful investor once made the same mistakes you are learning now. Difference is they learned, corrected, and never repeated them again later ever. You must become someone who learns faster than market punishes mistakes always. Avoid emotional shortcuts because they lead to long-term financial destruction silently. Focus on building habits that make good decisions automatic over time always. Your biggest enemy in investing is not market but your impulsive reaction. Every time you control emotion, you strengthen your financial future significantly always. Successful investing is about survival first and profits come naturally later always. If you protect capital consistently, you automatically create long-term long-term wealth eventually. Many investors fail because they chase excitement instead of stability and discipline. You should now understand that simplicity wins over complexity in investing always. Complicated strategies often hide unnecessary risks that destroy portfolios over time quickly. Keep your investment approach simple, clear, and repeatable in all situations always. Simplicity helps you stay consistent even during unpredictable market movements always happening. Do not try to predict every market move because it is impossible. Instead, learn to respond intelligently with discipline and patience every single time. Your focus should always be risk first and reward second in mindset. Protecting downside ensures your long-term survival in stock market journey always. Even professional investors prioritize capital protection over aggressive profit-chasing strategies always. You are now responsible for applying everything you have learned here today. No one else will control your financial decisions except yourself going forward. That responsibility is powerful, but also requires maturity and emotional discipline always. The moment you take responsibility, your investing results begin to improve naturally. Stop blaming market and start improving your own decision-making process always. Markets will always move unpredictably, but your reaction determines outcome always completely. You must choose discipline over emotion in every single investment decision always. Long-term success is built through thousands of small, correct decisions daily. One disciplined investor can outperform many emotional traders over a long time easily. Your consistency matters more than occasional lucky trades in financial growth always. Wealth building is a marathon requiring patience, focus, and emotional stability always. Never forget that losses are lessons that guide better future decisions always. Every setback in investing is an opportunity to improve your strategy further. Keep refining your approach as you gain more experience in markets always. Stay humble because markets reward humility and punish overconfidence heavily, always consistently. If you remain disciplined, you will see gradual financial transformation over time. Trust the process even when results seem slow or uncertain. Initially, always. Real wealth is built quietly through discipline, not emotional excitement or hype. Your mindset is now your strongest investment tool moving forward in life. Apply everything consistently and results will follow naturally over time, always eventually. Do not stop learning because markets are always evolving and changing constantly. Stay focused, stay patient, and stay disciplined in all financial decisions always. This journey is not easy, but it is extremely rewarding long term. You now have awareness that most investors never truly develop in life. Use this knowledge wisely to build a stable financial future ahead confidently. And remember, successful investing begins the moment emotional control becomes your strength.